Hello guys, welcome to this week's video. In this I'm going to be talking about internal and substructure and how you can use them to frame up your trades. So first of all, getting straight into it, what is the difference between internal and substructure? Well, if you've seen my previous videos, you'll know how I define swing structure, so I'm not going to go into that. But let's imagine we've got a leg here, so we've got a swing high, a swing low is formed, we break that swing high, okay, and then we form some substructure, not a cemented low, and then we get a break there. This is a chock, this is a change of character. So we have now a cemented swing high as well, say a candle closed below the candle to its left, and we've also broken substructure here with this, so we've got a chock. Now, because we've got our swing high up here and our swing low down here still, any structure now formed between there, for me, is substructure, because we've had that change of character, we've had a level of demand that has failed and been broken, and then the structure that forms after that, I will use the same rules that I do for swing structure, but because it's happening between the swing low and the swing high here, it is substructure. Only once we get a break of either the swing low or the swing high do we then see it as a break of swing structure. Okay, now say you get this, okay, but when we have our leg of price and then another leg of price, there's no chock at the top, there's no break of any demand or substructure, but price comes down and starts moving like this. This is internal structure, and the main difference between internal and substructure is that there was no chock. There's no breaking of any level of demand here. It's just price moving down within a large leg. You'll often get this if you have a big news spike where price aggressively mitigates a zone above. And so, yeah, after that, price will push down, cement a low, so we get a candle that closes above the one to its left, and then breaks that. So at this point, you've got your first level of internal structure because we formed a valid low here, and we've broken that low, and then so now we have confirmed that we have internal structure. And then once you've got that, you can look at order flow in the same way that we always look at it, looking at premiums and discounts and all that kind of thing, and trade through there. So for instance, if this is a 15-minute bit of structure, you've got your swing high and your swing low down here. To be safe, what I would do is, if you want to trade counter trend and take shorts from here, I would say it is valid to do so until you get down to this discount area, and then you want to be very wary of taking any shorts once you've tapped into there, because the expectation is that once price reaches this discount, it will continue up from there. So, very simple ways of framing up trades and how to trade with internal structures. Same rules apply for substructure. If there was let's just make that like this. So our swing high is there. We've had our chock right here, like so. Same rules apply for substructure as internal structure. You sort of take trades down until you reach the discount, and then trades are off the table because you're in the discount. You're more looking for buyers now. So if we look at a little bit of recent price on EU on the 15-minute, we'll see we've had an example of this lately. Okay, so we've got all our structure mapped out here, looking at majors and minors and all that kind of thing. And now we got a break of structure right here. Okay, so we had a break up here, a push down, and then a further break up here. So our swing low would be down here, our swing high is up here, because if we look at this leg, none of the candles after the break closed below the one to their left. As you can see, all the way up, we've got it's just one leg of price. Now in this leg, we can see that we did have some pauses in price. You can see the pauses I would count after the break would be here. Got this candle, didn't trade above this one. Here, this candle didn't trade above the one to its left, and that is it. So if we're looking for a change of character, our first point of substructure would be here, and then we get a break of that. Once that is broken, what we're waiting for is a cemented low after that, which we get here, because you can see the candle closed, this candle closed above the candle to its left. Okay, so now we're forming substructure between the overall swing low and swing high. Now it would be valid to take shorts down here, following your rules for trading all the way down until you reach this discount. So we get to the discount first of all here. So here, shorts would be off the table for me. As you can see, as we've hit this discount area and hit this pretty clean zone down here, what has price done? Well, it started to move to the upside. Still fairly sideways, but it's a simple way of writing off where you're going to take longs and where you're going to take shorts from. So once we tapped into the discount, once we tapped into this zone, we are ready to frame up longs. So yeah, and the same thing works the other way. So first of all, you can frame up the first chock, which would be, if we look at the pauses coming down in this substructural leg, the most recent pause would be here. So that's a high, then that high gets taken there, and then price comes down and continues from there. Now what you can also bear in mind, because we've already had this substructure formed along the way down here, we can look at these cemented lows. We had one down here, pushed up, and down here, and then down here, and we can look at this structure as a stronger form of structure. So yes, we kind of had our original chock here, but we can also look at this as a more valid breaker structure here. Okay, and then we frame up our premium and discounts again from there. So at our first cemented high, and price continues on. This is again a different subject, but a good example of unmitigated premiums and discounts. We have this discount zone here after this first break of substructure that was never mitigated over at this point before price continued up. Then price returns back down to that level. You can see here, taps into this very clean supply zone down here, and then we get this big push up. So yeah, rules are followed, structure is followed, structure is king for me. And yeah, you've learned about substructure, you've learned about internal structure. Quick example of internal structure as well. We did form some up here. So we get this strong push up over here, and then you can see we where's my arrows? We cemented a first low at this point with this candle, closing above this candle to its left, and then broke down again. And this is all before any kind of change of character. Then we created this structure here, cemented at this low, pushed up, failed to mitigate the premium of this, pushed down, came back up, mitigated this, pushed down again, and then ultimately you can see you could follow this structure all the way down, take a trade from here, and boom, down she goes. So you get that push up into more of a premium zone, swept the high, cemented a high, formed internal structure, and then just following the order flow of that internal structure, you could frame up a short from there down into, again, these discounted zones. Okay, simple as that. Thanks for watching. If you like the content, give me a subscribe. If you really like it, come and join the Academy, where I go through this stuff in a lot more detail, and you can talk to me every day if you really want. But yeah, stay tuned for weekly videos, and I'll see you next time.